Today, I'm going to share common mistakes to avoid when buying a home. Number one is avoid looking for a home before applying for a mortgage. When you're buying your first house, it's common to start viewing homes before speaking with a mortgage lender. In a competitive seller's market, you'll find it almost impossible to get your offer taken seriously without having a mortgage pre-approval, unless, of course, you're paying all cash. This is because sellers won't want to take a risk on someone who isn't even certain they can qualify for a mortgage, especially when they have many other offers on the table. When you get pre-approved, you might also consider locking in your interest rate. It'll help you get a handle on costs and alleviate any concerns about rising rates when you do go to make that official offer. If you skip this step, you will be behind the eight ball if a home you love hits the market. You will also might look at homes that are out of your budget. We don't want to get hopes and dreams up here, and then find out that in reality we're down here at this certain price point budget. Being pre-approved conveys that you are a serious qualified buyer. If you need any recommendations for local lenders, we would be happy to provide you any of their contact info. Number two, avoid fixating on the house over the neighborhood. Of course, you probably want a home that checks all the items in your wish lists. However, being nitpicky about a home's cosmetics can be short-sighted if you wind up in a neighborhood you dislike. Choosing the right part of town or neighborhood can be critical. You can always trade up or down for a new home, add a third bedroom, or renovate at a later date. You don't want to end up loving your home but hating your neighborhood. Decide on what your priorities are in a neighborhood, the surrounding community, and then conduct your research. Go to that local gas station, that local grocery store that you're going to be frequenting. Depending on your needs and wants, you may want to research school ratings, commute times, and other factors. You also want to visit the neighborhood at different times of day to get a sense of the traffic flow and to see if it's an area that interests you. Number three, avoid waiting for the unicorn. Unicorns are mythical creatures, both in nature and in real estate. On the list of common home buying mistakes is looking for the home that checks every one of your boxes. Focusing too much on perfection can narrow your options, potentially lead to overpaying, passing over a good suitable option, and also lengthen the home search timing. We advise you to keep an open mind when touring each and every property. Focus on the things you can't change, like the size of the lot in the neighborhood. If it boils down to cosmetics, mechanics, size, an outdated kitchen, bathroom, etc., some items can be tackled at a later date, or there are certain loan programs that let you roll in the cost of repairs and renovations into your mortgage. Number four, avoid making decisions based on emotion. Buying a house is one of the biggest investments you will ever make. It's a place where you can create your environment, make lasting memories, share laughter, and raise a family. Be practical and never lose sight of your needs versus wants, budget, and long-term financing goals. Keep in mind that emotional decisions could lead to overpaying for a home and stretching yourself beyond your financial needs. Number five, avoid talking to only one lender. First-time buyers often get a mortgage from the first and only lender or bank they come in contact with, and that's a big mistake. By not comparing and consulting different lenders and what they have to offer, you're potentially leaving thousands of dollars on the table. Don't hesitate to shop around to ensure you're getting a good deal, professional service, communication, and of course, the lowest rates possible. We advise to consult at least a few different lenders as well as a mortgage broker. Try to get interest rate quotes all on the same day since rates change regularly. Then compare the rates, terms, and fees. Don't discount customer service and lender responsiveness because both play key roles in making the mortgage process run smoothly from start to finish. We would be happy to provide you with any lender recommendations if needed. Number six, avoid being careless with credit. A mortgage lender will pull your credit report at the time of pre-approval to make sure things check out and once again just before closing. The lender wants to make sure that nothing has changed in your financial profile throughout the home buying process. Be sure to pay close attention to this one. Any new loans or new credit card accounts on your credit report can jeopardize the purchase and final loan approval. So be sure to either consult your lender or totally refrain from purchasing your new home furnishings and appliances until after closing. Ironically, even closing existing credit card accounts can negatively affect your credit score. Lastly, be sure to pay all of your bills on time every month leading up to the mortgage application and all the way through closing day. Number 7, avoid overlooking FHA, VA, and USDA loans. First-time buyers might be cash-strapped, have little saved for a down payment, or have imperfect credit. In turn, assuming there are no available financing options and then fall back into renting. A mortgage professional will be looking out for your best interests. They will help guide you into one of the 3 government-insured loan programs backed by the Federal Housing Administration, U.S. Department of Veterans Affairs, and the U.S. Department of Agriculture. I will have another video with a more detailed description of these loan types. In short, you can actually qualify for a mortgage with a credit score as low as a 550. However, the loan terms may vary, including down payment required, interest rates, etc. Number 8, avoid moving too fast. Buying a home can be a complex process. Rushing the process can cost you later. One of the biggest mistakes that we see is not to plan far enough ahead for the purchase. We recommend starting the process at least 6 months in advance. Waiting until your dream home hits the market before starting the process means you might not have or be unable to save enough for a down payment and closing costs. Speeding towards closing may also not provide enough time to address items on your credit report that may prevent you from securing a more favorable loan term. Keep in mind it can take months, maybe even years to repair poor credit and save enough for a sizable down payment. On average, most buyers can only save about $5,000 per year towards buying a home. The earlier prepare, the more time you have to work on boosting your credit score, paying down debt, and save more money to put you in a stronger position to get pre-approved and potentially receive better loan terms. Number 9, avoid buying more house than you can afford. It's easy to fall in love with homes that might stretch your budget, but overextending yourself is never a good idea. With home prices trending upward, it's especially important to stick close to your budget. We don't want anyone to be house poor. Buying more home than you can afford can put you at risk of foreclosure. If you fall into rough times financially, you'll have less room in your monthly budget for other bills and expenses. Being house poor can also eliminate other opportunities such as funding a retirement account, child's education, saving for a vacation, or maybe another investment property. We recommend to focus on what monthly payment you can comfortably afford rather than focusing on the maximum loan amount you qualify for. Just because you can qualify for $1 million loan doesn't necessarily mean you can comfortably handle the monthly payments that come along with it, in addition to other financial obligations. Everyone's case is different, so be sure to take into account your whole financial profile when budgeting how much house you can afford. It's very important to be completely honest with your lender about your finances. At the end of the day, you'll be the one responsible for making the monthly payments, so try not to take on any extra debt you can't manage. Number 10, avoid draining your savings. Spending all or most of your savings on the down payment and closing costs is one of the biggest first-time homebuyer mistakes. Homebuyers who put 20% down or more don't have to pay for private mortgage insurance, PMI, when getting a conventional mortgage. Although that can make for substantial monthly savings on your mortgage payment, it's not necessarily worth the risk of draining your savings. We advise to have 3 to 6 months of living expenses in savings even after you close. Paying mortgage insurance isn't ideal, but depleting your emergency or retirement savings to make a large down payment is a risk that can be avoided. Number 11, avoid the assumption that you need a 20% down payment. The long-held belief that you must put 20% down is a myth. While a 20% down payment does help you avoid mortgage insurance, many buyers today don't want to or can't put down that much money. In fact, the median down payment on a home is 13%, according to the National Association of Realtors, and 6% for first-time homebuyers. There may also be down payment assistance programs or even some grants that may be available to you. Delaying your home purchase to save up 20% could take years. Home prices could drastically increase in the meantime and could constrain you from reaching other financial goals like maximizing your retirement savings, adding to your emergency fund, or paying down other debt. Number 12, not lining up gift money. We understand that not everyone has a bank full of cash. Many loan programs will allow you to use a gift from a family or friend toward your down payment. In order to avoid any hiccups along the way, we recommend to have a discussion with anyone who offers money as a gift toward your down payment. Get an idea of how much they are willing to offer and when you'll receive the money. Make a copy of the check or electronic transfer showing how and when the money transferred hands from the gift donor to you. Also, it won't hurt to go ahead and prep the donor that the lender will most likely request proof of where their funds originated. If you're in the market to buy a home, the above tips can help you avoid some common mistakes while house hunting and mortgage shopping. Are you ready to get the process started? Just click the link to schedule a free consultation. Thanks for watching, and for more info on real estate related topics and processes, be sure to like, comment, and subscribe. Thanks.